Have you been keeping up with the roller coaster ride of the stock market recently? If not, let me fill you in. The market has been going through some turbulent times, with notable losses across the board. Major indexes have taken a sharp nosedive, creating a stir among investors. However, amidst this chaos, Dow Jones futures have managed to maintain their stability, acting as a beacon in stormy seas. In contrast, S&P 500 and Nasdaq futures have shown modest gains, offering a glimmer of optimism. Now, let's turn our attention to the tech sector, which has become a focal point in these uncertain times. Of particular interest are the tech futures, with Nvidia earnings taking center stage. As one of the leading players in the artificial intelligence and chip market, Nvidia's performance is eagerly anticipated and could set the tone for other tech giants like Taiwan Semiconductor and Broadcom. As we can see, the tech sector, particularly Nvidia, seems to be at the forefront of investor interest. Now, let's delve deeper into the tech futures, with a special focus on Nvidia's earnings. Nvidia, a giant in the tech world, has recently caught the attention of the market. Its earnings and guidance are proving to be pivotal, not just for the company, but also for the broader AI and chip sectors. Companies like Taiwan Semiconductor and Broadcom are keenly watching Nvidia's performance. Nvidia's earnings are expected to showcase robust growth. The spotlight is on Blackwell production, a promising sector that could be a game changer for the company and its investors. But as we all know, with high potential comes high risk. Given the current market environment, which is experiencing some turbulence, it's important for investors to approach with caution. New buys might need to be thought over carefully, and it could be wise to consider reducing exposure to manage potential risks. The anticipation is high, and the world of tech is waiting with bated breath. Investors are eagerly anticipating Nvidia's earnings report, which could set the tone for the tech sector. The Trump trade has been a significant factor influencing the stock market. Let's take a closer look. Recently, the Trump trade has faltered, causing ripples across various sectors. Drug makers, biotechs, and government tech consultants have all felt the sting, experiencing losses that have shaken the market. This downturn is not an isolated event. It's part of a broader picture, where economic data and remarks from the Federal Reserve are playing pivotal roles in shaping market sentiment. Market watchers are paying close attention to these elements, interpreting them as signals of possible shifts in market dynamics. This development has prompted a wave of caution among investors. With the Trump trade faltering, the investment landscape seems to be shifting. It's a time of adjustment, where the savvy investor is not just watching the numbers, but also reading between the lines, discerning the subtle cues that could indicate the market's future direction. With the Trump trade faltering, investors are treading carefully, keeping a close eye on economic data and Federal Reserve remarks.